Hey guys, hope you guys had a good week this week. Kind of a little bit unexpected week if you were coming in bearish this week like most of us was. After basically a month now of selling off, this week we finally saw a bounce and actually were able to close a green week. So we actually had quite a change in momentum and sentiment, I would say, and there's a lot of reasons right now to switch from Team Bear to Team Bull, and I have switched over. So let's talk about it. So coming into this week, we were in this nice downward channel. We were holding basically this as our support line with here and here, and we had a key resistance right around here. But what happened was we hit 390, and we had two huge bounce days off of that 390, 391 range. We were able to break through, and we even closed right here at 390.76 below that 391 support. Granted, we didn't close below 390, but 391 really was my level of like a pivot. And we even broke down here as low as 388.42, which clearly broke us through 390. However, you can see here we had a pretty big bounce. Interestingly enough, what happened was, and as you guys know, I was pretty much playing the bearish CPI was going to be coming out. So going into this week, we had no forecast and we had no consensus for CPI. That is not historically how it happens. Historically, they release a forecast and a consensus about 2 to 3 weeks before CPI is supposed to be released. So CPI is coming out this Tuesday. So the fact that they released the consensus and forecast on Thursday and Friday was very odd. The other weird thing they did was they released the forecast of 8.1%, which is below the 8.5% previous CPI, on Thursday, which was yesterday, right before Jay Powell spoke. So this, in my opinion, was extremely tactfully done. Jay Powell came out very heavy bear. Markets recognized that. Markets said, hey, you know what? He's got a lot of negative stuff to say. That pre-market, if you were watching it on Thursday, and even the opening, like about 5 minutes, was very bearish. Markets came out and sold. However, about the rest of the day was extremely bullish yesterday. In my opinion, we were going for what we got today and on Wednesday, that extreme bull day, yesterday. But what happened was the queen died and around noon, and there was also something with the Iran deal, and markets dumped. They did recover, and we still closed a pretty bullish day, but I think that took a lot of steam out. I think yesterday we were meant to touch 405.2 area. This resistance is 405.4 resistance. However, it got stopped because of the bad news that was unexpected. So today it comes out. I think a lot of people were expecting, including me, to see a possible double top here at 400.4, and then we would see the trend, the trend down. However, we actually gapped up almost. It was about $3 when we first opened. We did see a small retrace at open to fill some of that gap, but we actually had a really bullish day again today. So a lot of things have happened. So you can see we have this nice V-bottom recovery right here. This is huge. So this started forming about here on the 7th, and then yesterday confirmed it, and today reconfirmed it. Now I would like to see a retest possibly on Monday of that support before I truly believe we're going to go high, and this will be my line in the sand. If we break this level, I will get, if I do end up going long in calls, I will leave my calls as soon as that level is broken. Today what happened, we closed over the AEMA yesterday. Today we fully closed a whole candle over it, and we closed back over key 405.2 resistance. We are now playing level to level, so you can see this was a trend down. We broke in, we retested it, we failed. We broke to 405.2, we broke through to 390s. This held now, and now we're back to 405.2. So we closed above 405.2. We should assume we are going back to 417.4 area. However, we could see a retest of support first. This could be a fake breakout, kind of like you saw back here. There's a lot of things that could happen. But we have to look at the macro events that are happening. Next week on Tuesday is CPI. CPI, in my opinion, if you've listened to the Feds, Jay Powell, Biden, anybody, they've all said inflation has not peaked. So the fact that the consensus and forecast was not released yet made me, at least, assume, and I think the markets too, based on the sell-off, that CPI was going to come in hot. It was going to come in back over 8.5%. However, now that they've come with a consensus at 8.1, and even Cleveland Fed, who's usually pretty close, their now forecast for CPI is around, I think, 8.2 the last time I checked. I need to check an update on that eventually. It's a pretty good chance we're going to see at least CPI under 8.5%. So with that in mind now, we should be bullish. We should be looking for a move up. I'm expecting Monday we are going to see a little bit of a retrace, probably at least retest 405.2. We might come down and test 402.7, which would kind of retest this V support. We could even come as low down to here to 400.86 and fill the gap, or even retest 400.4. This level right here, obviously you can see, was a pretty key area. So to retest this would actually be pretty bullish if we held it. Regardless of what happened with Monday, I expect consolidation, possibly most likely a small red day after 3 big days of moving up in bull strength. That opens up for CPI on Tuesday, which most likely will come obviously good. A CPI that comes in good, we are going to be looking at like August right here. So this is when, this is when CPI came in. We had CPI right here. You can see we gapped up and then we just ran. And then we did see a sell-off. Same thing back here. CPI was right here on the 13th. This was a miss on CPI. But you can see even with a miss on CPI, we had one small day to try to sell off and then it rocketed. Same here. June 10th was CPI right here. We had a sell-off and then FOMOC was right here, I believe. We bounced and we rocketed. So there is a lot of potential for a very big move up after this CPI comes out. Markets already know we're getting a 75 basis point hike. They already know what the Fed's going to do. They know they're not pivoting. There's really nothing left to be bearish right now. So if there's nothing left to be bearish on, you should be playing calls. So anyways, key support for Monday is first at 405.2, and then it puts it right here at 402.7 and then 400.4, like I said. Key resistance is going to be right here at 406.7, and then we're just going to work up to 409, 412, and then eventually I'd like to see us get to 417.4 by Friday right here. I think that's a pretty easy to achieve. Most likely we could even end up somewhere up in like 425, to be completely honest. It could be that big of a thing. And most likely 422 gap fill. Looking at SPY weekly here, so the kind of interesting thing is that in a bearish sense, we broke down through support, as you can see here. And on futures, and Apple especially, they broke this weekly support. So by that breaking, that should have opened up downside. It should not have left us with the possibility for upside like we saw. However, we're actually seeing a somewhat technical 392 double bottom here. And we closed above the previous highs candle. So this should open some upside. I would have liked to have seen the candle body down here at 390.4, but breaking it and then closing above it is pretty bullish. So we're going to look for key at 412.5, and then eventually we're going to look to go back up to this bear market resistance line that we talked about a long time ago, and that's right at 426. So we break through 426, and we're going to open some upside. And I think we have the momentum with CPI next week and FOMOC to really do it. I think we could end up in the 440s here in the next month. Key support is going to be here at 390.3 though. And then we're just going to slightly adjust our support line right here, and then that's kind of it. So now when we come back down, we're looking at about 391 as our support. So looking at futures, oh, I did not touch on the fact that this blue resistance line right here from the August 16th and August 26th tops has, as you can see, been broken. We did close the candle below it body-wise, but we did wick over it, so that is considered a break, and we should expect the move up, or a move up from here. So I'm going to go ahead and get rid of that. And this just kind of leaves a really nice, beautiful V bottom with a channel up. So futures has not broken their resistance yet. They need to see closer, or they needed to see closer to 41.05 today. However, on Monday, well, Sunday night for them, you can see 40.92 is going to be their level, which is just under the high of the day from today. So it should be okay. Pretty easy for them to do that. From there, support-wise, is right here at 40.60, and that's that V-bottom support. I would like to see this held personally and leave the gap for now, but a gap fill back down here to that 40.10 level would really solidify support if we held that. Looking at the weekly for futures, so same thing. We did break that support level. I did just retweak it and kind of put a new one in there based on this week's candle and the June low. We did break through the bull channel here in the weekly. We did close back over key 40.25 level here. So the next level I'm going to be looking at is right here at 41.60, pretty much 41.60. And then from there, we're going to be looking for 42.80. Those are the next key levels. Futures never actually tested the resistance up here at 43.40 when we were there. So this week, if it wants to, it's right there at 42.80. So that's very much so in range. That's about a 200-point move. That's nothing. That's like 4.5%. That could easily be achieved this week. If we break through this, like I said, I think we're hitting 4,500s, 4,600s. Key support's going to be right back down here at 40.25, and then followed by the support right here at 3,900. So we can see we got some key supports to hold us up this week. Looking at Apple. Apple's kind of peculiar. Apple is something I just can't get a grasp on right now. So when you look at SPY compared to Apple, I mentioned how bearish Apple was making lower lows, making lower highs. I mean, it was selling off. Even when SPY was running, Apple was lagging. Most of the time, in the past at least, we have seen Apple be the charger. So Apple does something and then SPY follows it, whether that's sell off or rip. But this week, we actually saw a lot of weakness out of Apple, and then SPY would be making a move up, and Apple would actually come to SPY. So that's not something that always happens. So that is kind of interesting, and something I'm going to keep an eye on. So, key levels to watch this week is this V bottom right here. For Monday, it's going to put that level right about here at, it's basically 156.8. From there, we're going to, if we break through this support, the next major support is down here at 154.4. However, we should assume this support will hold, and we're going to look to get through this resistance right here at 158, and then we're going to look for some upside here, closer at 159.8, and then eventually up here at 162.2. We're way farther away from this resistance sell-off here than we are on SPY, so that's something to keep in mind too. And that's also why this week I did come in bearish with my puts, and I feel like I held my puts longer than I normally would when I feel like I'm wrong, possibly wrong, I should say, just because of how Apple was behaving. I was basing a lot of my play off of Apple, and honestly, if I would have just played Apple puts instead of SPY puts, I would have done much, much better. So that's kind of frustrating, but kind of part of the game. So Apple Weekly here. So like I said, Apple Weekly had broken through that weekly resistance line here, or support line, I mean, right here. I did draw a new one just based off the June and this week's low. So the one thing that's interesting, if you look here, we actually have a nice gravestone here, doji. So that's a reversal. So, did I say gravestone? I meant to say dragonfly, I'm sorry. Now I'm having brain farts here, hold on. Dragonfly doji. I'm sorry. I don't know. It's been a long week, I guess. Anyways, Dragonfly doji right here. So if you see here, we had this gravestone right here, and I did say that was probably going to signal the sell-off, and it definitely did. We are basically seeing the opposite here. So this really is going to establish a range, that too, but we should see similar movement. So this dumped us. This should move us up. So we are still in the weekly sell-off channel right here, which is interesting because obviously SPY and futures have broken through that with no problem. So, but the one thing to keep in mind that is unless Apple opens at 156.5 and holds there for the whole week and doesn't see any movement green, it's going to break that support. And most likely it'll break that resistance on Monday morning. And that opens the upside even more and gives it more confirmation. Key levels to keep an eye on is obviously this 157.5 here, followed by 161. 163.5, and then eventually 166.4. Support that we want to see hold is this 154.9, which is this new weekly support line. A reconfirmation of this would be pretty bullish to get 3 touches on that. That actually would solidify the fact that we are going to see a bounce. Let's take a look at the VIX here. So the VIX was in that nice recovery up line, and it broke it officially yesterday, and I was positioned with puts, and I should have taken that closure and breaking of that VIX recovery as a sign to get out of my puts. Looking back at it, that should have been my first signal that I was on the wrong side and that we were going to see a bigger move up. Of course, market's irrational. It's the hard part about swings. If you exit a swing too early, then you're just capping yourself and you might as well have not even played it. However, because sometimes it just, like if you look back here, like if you would have bought, say we broke through this level and you bought a put here because we finally broke through and you're like, you know what, we're going to probably see 405. So you buy a put here, 14-day or whatever. You held it here, you're like, all right, I'm doing pretty good, but I'm still going to hold because, we're going to keep going down. Then you see this bounce up here. Now you're like, oh my gosh, what do I do? We broke back this level. Should I close out? Because if you would have closed out here, because you're like, that was a big move back over for 417.5, we're bullish now. And then the next day coming, we just dumped 3.4%. Now we're back in bear territory. And then that even went to a bigger, another $10 sell-off. You selling here because of 1 day, 2 days against your thesis, you would have missed out on a ton of reward. However, like me, who entered puts around here, we had 1 day up, 2 days up, and then I exited today finally at a decent loss. It's tough. Swings are hard. They're really, really hard because, 1 day can change the momentum. An event can change the momentum like the CPI. So I'm not a big fan of swings, and everybody in the Discord knows that. I don't really like doing swings anymore. I do them occasionally, and I mean, it's 50-50. So anyways, VIX is moving down. It's in a nice sell-off here. If you zoom out, we're pretty much just in this big old downward channel on the VIX here. But we're in a trajectory with CPI coming in bullish and FOMOC that, I mean, we might even see the VIX hit 15 point, the 15s or the 18s here, in the next month. So looking at Bitcoin, Bitcoin's interesting. So let's zoom out here a little first. So this red resistance line uses the March, basically the March to April highs along with the August high. We broke through that yesterday. Well, I guess technically it'd be today because Bitcoin's daily chart runs from like 8 p.m. to 8 p.m. So sometimes when I say today, it's actually yesterday, and yesterday is today, so it's confusing. But either way, today's candle, which opened yesterday, did break through that, and we even closed. So we are through this resistance now. That's a pretty bullish thing too. So, we've been doing basically just a ton of consolidation from 25K to really like 18K, with most of it happening between this 19 to 23 level. But we're probably going to see our next move here. So with this consolidation here, we could even just kind of like a head and shoulders almost forming here with this dump, a bounce up, and then we dump back down. We could be seeing a move back to the 30K range, which would also support my thesis that we're going to see bullish movement. So going back to SPY here, my anticipation when I zoom out here is that we're going to end up about Monday is going to come in with CPI. We're going to finish somewhere probably between here and here is my guess. This is where the candle's going to do most of its time. And then we're going to have CPI come in. Most likely what's going to happen is CPI is going to be bullish. And preferably we're in a lower position so we don't leave a gap like we did right here. Leaving a gap, you have to come back at some point and fill it. So most likely what's going to happen is we're going to come in with a red date at Monday. Tuesday is going to come in right about here. We're probably going to open about here. And then from there, we're just going to be on a path. And then this is the day, this is FOMOC right here. So we could see a run until FOMOC, which is on the 21st. And we could be, I mean, easily back at 430. Now, something could surprise us at FOMOC meeting on the 21st, which is 2 Wednesdays. I don't think that's going to happen. I'm pretty sure that Jay Powell is going to come out and say, here's our 75 basis point hike. We're still doing QT like we said we were. Nothing's changed. We're going to continue to do rate hikes, which the market knows. La-di-da, blah, blah, blah. And then from there, you know, we're on a path right here to 460, shoot, maybe even up to 450, maybe even up to 460, and that's by October. And then right about here is where we hit earnings. So earnings could be our next major thing. So you can see how, you know, easily we're in there. And if you just draw like a trend line from here to here, and we just kind of superimpose that right over here, I mean, you can see where my target is right there, 450. It's not out of the, I mean, it's not a meme. It's not a joke. I mean, 450 by October 7th is a big reality. And that's kind of what I'm betting on. I mentioned it in the actual written TA, but essentially my plan is to sit cash. I had some long calls, 30 DTE, but I decided to close them end of day. I'm going to sit cash, let Monday happen. I'm going to play calls in from Monday night into Tuesday, just using some 0 DTX SpyX, obviously banking on a good CPI. I will close those profitable or at a loss. If CPI comes in bullish, like I expect, which would be a lower than 8.5% reading, it doesn't even have to be 8.1%. It really just has to be 8.5 or lower, because that does, to the market, show peak and or slowed inflation. So as long as it comes in at 8.5 or below, it's going to be bullish. I most likely will wait for Tuesday to play out, depending on just my sentiment and how well my calls do, really. And from there, I think I will open some, most likely 30 DTE, maybe 20 DTE calls, with my anticipation of holding those through FOMOC and probably till at least test 430, maybe 440 to 450. That's kind of my goal right now. Hold some calls until early October. I think it's a great play. The only thing that will make me not hold calls if I do open them or choose to open them be one, obviously if CPI misses. If CPI misses and it comes in at anything over 8.5%, we are probably going to make a new low for the year. We're going to just see June right here, this June where we went boom to boom. If CPI comes in and at a miss, you're looking at a new low in the 350s, easily. If not, you know, 340s. Not a question. So if CPI misses, obviously will not be open calls at all. I'll wait this out. I probably won't enter puts because I don't trust the market enough to go down like it should. Or if we get to FOMOC and there is something like absolutely wildly off the wall that Jay Powell says and the market takes it terribly and like really sells off and doesn't see the normal FOMOC rally intraday. Other than that, that's my plan. I had a great week trading this week, so I hope you guys have a good weekend, and I will see you guys next week. Thanks for tuning into this video. Hope you guys enjoyed it. If you like what you saw, go ahead and hit the like and subscribe button to stay updated. I am providing my Discord link right here. That's a lifetime link. If it doesn't work, go ahead and send me a message and I will get you a new link. I do have a pre-market update I do every day where I update with supports and resistances and different scenarios that might play out through the day. I also do a live commentary throughout the day with updates and changes, and I do push out buy and sell alerts on SPY and other tickers that I'm trading at the time. Currently, membership is $20 per month or $228 per year. You can follow me on YouTube, Twitter, Instagram, or TikTok under SPY Optionaire or Reddit under Daddy Dirge.